there is some nervousness in the Asian markets. So the Taiwanese index is down 46 points.
Interest rates have moved down a bit on that. We're at 4.25 on a 10.
Money Group has acquired Penna Cement at an enterprise value of 10,400 crores, which will be funded via internal accrual. 23,500, as I said earlier, that's the important level.
We don't even know what rate will eventually be applied as and when, or if rather, gas comes under the GST.
The markets have opened up with a green of close to around 30 points.
Market has already discounted some of the expectations that were there with the new government.
The oil and oil products are the biggest source of revenue today.
Green on the screen, mid-caps are anyway outperforming. And now, finally, there's some life on the large cap screen as well.
At 2.61, assuming the base is zero, we are getting something like a 5% or a 6% WPI.
A lot of good things have happened, and one is expecting continuation of that to make, as I say, velocity of doing business in India faster and easier.
Good Friday for the bulls. The Nifty has recovered 120 points from the lows. The mid caps, they continue to do well. Small caps are higher.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon and welcome to the last trading hour of the week. We are here with you on Closing Bell. And the news from the street is that the market has managed to make some more headway. Today has not been a complete sellout day. In fact, the green on even the large cap screen is intact. I have Nigel and Mangalam with me in the studios. Guys, last 1 hour of the trading day at least.
Yep, and it's a good afternoon for the market itself, because we thought that there would be some sell-off coming in post that 23,400 mark. That hasn't come by. The Nifty is doing well. The Nifty bank, it crossed the 50,000 mark. From there, it saw some selling. It's just 20 points away from that 50,000 mark. Let's see where that goes from here. Well, that has not conquered the 50,000 mark and stayed above it for a very long time. The Nifty is holding up, no real problems. We are seeing support come in from multiple sectors, and today's up move is led by autos. We have all the auto stocks doing extremely well. Eicher Motors extremely buoyant in trade today. We have M&M, which has crossed past Maruti in terms of market cap as well.
All right, and just one thing, guys, we'll say it's a quiet week because the Nifty is up, I think, 0.6, 0.7%, and we have gone to 23,500 numerous times, but we couldn't get past that hump. But if you just compare the action with the small cap index, that's up 5% this week. That's the kind of outperformance you're seeing. So portfolios will feel good, and there's a long weekend that's coming up. So, the bulls will be looking forward to that. You just pull up, maybe a last 1 week chart of the small cap index. You can pull up the Nifty as well. If you show it in just one screen, you'll see the kind of outperformance that I'm talking about from the small cap index. So portfolios are feeling good, and some of these defense names, anything that has anything to do with defense, just flying away. That's the picture that I'm talking about. And big outperformance is what we are seeing. This is the 1 week chart actually. So we're referring to the 5-day chart, and that's the reason why, in fact, we're up 5% for this week on the small cap index. The Nifty is up just around a little less than 1%.
Absolutely. In fact, Nigel, I want to pull up some of these PSUs on the defense side. Look at Masnow Dock. There's a 16% up move right now on this stock. And these are just absolutely gravity-defying moves that are happening this afternoon. There's a Cochin Shipyard, which is up about 7.5%. There is Garden Reach Shipbuilders, which is up 9%. So the shipbuilders are the clear favorites, but they're not alone. Look at a BEML. I mean, what a move on the stock. There's a 17% up move on a BEML underway as we speak. Actually, even some of the private sector names that have, anything to do with defense, they're actually getting bid up in a big fashion. Look at Paras Defense, 20% up on Paras Defense. Bharat Dynamics is up about 7%. And even Data Patterns, that does a fair amount of work for the space sector, aerospace, space, defense. Even this stock is up about 7 to 8%. So this is just one example of what's buzzing in the mid-cap market. There's a lot going on out there.
There is indeed a lot going on. In fact, Paras Defense, we had the management just about an hour ago, and they were bullish on the prospects of the business. But at the same time, they said they weren't as bullish on the drones sector. In fact, they were looking at anti-drones as an opportunity. But guess what? The street is also bullish on the drone space. So we have a couple of these drone names. Dronacharya is up around 10.5%. We have Idea Forge is up around 10%. So, across all the defense buyers, we are seeing some sort of moves. but also the logistics space that has been buzzing all through the morning and now increasing its extent of gains. All Cargo Gati, for instance, is up around 12%, giving it company Snowman Logistics. So the promoters of Snowman Logistics, Gateway Distripark, have said that they will be looking to increase their stake in the company all the way up to 51%. They had bought 5% last year as well. Now, the stock is up and about right now. And all the other defense, apart from defense, we have all the other, logistics players doing extremely well as well.
No, absolutely. I mean, and plenty of names actually. Look at, go beyond defense, look at some other names. There's a Lemon Tree Hotels, 4% higher. L&T Finance ever since that block deal happened. Because remember that one of the buyers in the block was the parent entity itself. So, I mean, the market's like that perhaps. About 3% up on that stock as well. Then you have the likes of an NBCC, SAIL, REC, some of the non-defense PSUs. They're still finding traction despite the kind of run-up we have seen in stock prices. And of course, on the large cap screen, barring tech. So we haven't spoken about what's not working today, and that's technology. Largely speaking, frontline tech, mostly under pressure. TCS, Tech Mahindra, Wipro, all these stocks are down, but not by a huge stretch. 1.5% kind of a decline coming in. Otherwise, it's not a bad looking screen at all.
Well, that's right. And just take a look at stocks like Cummins as well as Siemens. Both of them, in fact, both of them are higher in today's trading session as well. So one would say that maybe, in fact, the valuations are getting a little bit extensive, but those stocks, they're not buying any of that. Just take a look at that. Both of them now at the high point of the day. How do you position yourself, though, in the final hour of trade, getting into a long weekend? Mitesh Thakkar joins us to help us out with just that. Hi, Mitesh. Good afternoon and good to see you in. Do you think these last 60 minutes are there when the Nifty could stage a bit of a breakout? What are the levels you're looking at on the upside? That 23,500 mark, that's a level that we are struggling to conquer. Your take?
So, Nigel, I think, I would agree with that. One, I think the Bank Nifty sustaining about 50,000 should add some strength to the Nifty itself. And the Nifty, its own chart is now not looking bad, given the fact that, we are above this 23,400, 390 zone. So good chance that we might see some kind of spurt towards the end and a slightly higher closing. And the buyer should be on the long side. And as long as if the Bank Nifty can capture 50,100, I think then, we might look at 400-500 points from there. So I'll focus on some of the financial names. On the stock side, I have a buy recommendation on Titan. Titan is the first stock which I would recommend buying with a stop at about 34.75 and look for targets of around 3600. And then HDFC Bank from the banking names, that's a buy with a stop at about 1580 for targets of 1630.
Right. So those are a couple of stock ideas that you have. It's the auto space that is doing extremely well. So I'm wondering if you have any pick from there. And also, while you spoke about Siemens and Cummins, Bharat Forge is surging, and ABB India, that's the one that is up about 7% as well. So any of these names that you like?
In fact, the entire pack looks good, Mangalam. Being bullish on the capital goods space, which is Siemens, etc. And had some trading calls over there as well. So I like that entire pack. But that apart, I think, something like a Bharat Forge, which has already been making new highs. Again, while the chart is not weak, you would not want to enter tactically from here. I think, the stock has been in an uptrend since the levels of 1400. And now it's 1720, doesn't offer you the best risk-reward equation because the stop loss will be very deep. So a lot of these names, ABB also, I think, falls in similar category. If you're holding, just keep filling your stop losses, keep hoping that, the move goes on. But if you're wanting to enter, I think you would want to see some consolidation pullback before you do.
All right, just before we go to Parikshit, look at Nykaa. Nykaa, for most part of the day, was under pressure. The analyst day is underway. The company has made tall, targets going forward as well. The retail GMV for the beauty and personal care business to actually compound at 40%, margins improving, their fashion business and all the other businesses as well, good growth targets. The stock was under pressure, now suddenly seems to have woken up around 4%. From today's low, it's up around 7%, has spiked to the high point of trade. So we'll keep an eye out on that as well. Any sort of analyst reports on this is something that we will be watching out for as and when they come out, hopefully by Tuesday.
It's a very sharp move finally. The market took its time to perhaps digest that investor presentation that Mangalam was talking about. But finally, that stock is on the move. What is also on the move is obviously the auto sector. And you've got some big gains on Eicher Motors, Mahindra and Mahindra, Tata Motors. Even Maruti is now trying to move, shift a gear higher, if I can say. That's the auto index doing very, very well today. Well, guess what? There's a mega IPO on the horizon. Hyundai Motors is in focus. Sources suggest that the company is looking at an IPO in India, and this perhaps is going to be the first IPO that Hyundai will look at outside its home market. Parikshit has exclusive details on this. Parikshit, tell us more.
Well, we're expecting Hyundai Global to file this IPO for India with SEBI anytime this evening. In fact, this could be the biggest IPO that has ever happened in India so far. It is being valued, according to several reports and experts, at $25 to $30 billion. What is the company likely to do? We've picked up from sources that the company is likely to sell 14.2 million shares via a secondary offer. They're looking to raise 25,000 crore rupees via this IPO. What will this be used for? This will be used for one, capacity expansion at the existing plant and also in the new Talegaon plant that they've acquired from General Motors. Second, for development and manufacturing of electric vehicles, both in the affordable segment and in the high-end premium segment. And thirdly, for cell manufacturing in India to bring down costs of electric vehicles. And fourthly, to increase exports from India and make India a strong manufacturing hub for India globally. Now, at the same time, in terms of the financials that the company has submitted in the DRHP, we're getting to know from sources that Hyundai has had EBITDA of 6,607 crores for 9 months of FY24, and during the same period, the profit was 4,382 crores. These are the numbers which will possibly go into the DRHP. As you said, this is the first public listing for Hyundai here in India. Just about a month and a half back, the Hyundai Global CEO and their leadership were here in India for a 3 or 4 hour visit. They addressed a town hall and they had approved the IPO. In fact, that was the big discussion here. This has been now going on for a 6-month period. Bankers like Kotak Mahindra, HSBC, Citibank, JP Morgan, Morgan Stanley were Hyundai Global's bankers for this IPO.
Right, Parikshit. Thanks a lot for that. In fact, yesterday itself, we had Pranav Haldia join in and said that, you know, if and when the Hyundai IPO comes in, he said that last year, the IPO funds that were raised were close to 67,000 crores. And this year, it's going to surpass that, not accounting for the Hyundai IPO. If that comes in, then we are going to almost 1 lakh crores.
Almost 1 lakh crores. I mean, 3 billion. That's the amount.
He said it would be the biggest that we would see, bigger than what we've seen earlier as well.
Wow. Absolutely fantastic. Actually, Pariksha, thank you very much. That is a very exciting story. So we'll be glued to the ticker to figure out if this indeed comes through, if the filing comes through this evening. Let's take the conversation forward. We have Prakash Diwan with us this Friday. Prakash, great to have you on. And even better to start off with, you know, a story that perhaps connects really well with you. It's from the auto space. This could be the mother of all IPOs we've seen in the Indian market. What's your sense? I mean, they're looking to raise close to $3 billion. The auto sector has done very, very well, but it's more two-wheelers. But there's also M&M, which is one of the best performing stocks in the last 1 year. So do you think this is the right time for such a big offering to come in from the auto sector?
Good afternoon, Subi. So, you know, I think the Hyundai plans have been afoot for quite some time. The kind of presence that they have in India is absolutely one of the best in any of the markets that they could ever imagine. In fact, not just Hyundai products, you also have the Kia line, which has done so well for them. So it's very imperative that they would kind of want to, you know, monetize that. They've been investing into the India franchise for so long. I mean, you remember when the Santro came in, it was an altogether new era that started off. And they probably are the only ones which offer a fair competition in some of the segments to the market leader, and that's Maruti. So it will be interesting. People will want to kind of diversify if they had to go into a full range auto player. Unlike, you know, M&M or maybe Tata Motors, which are very niche still, more focused on SUVs, certain segments of cars. Hyundai is much more broader based in terms of, you know, the range that they have. So it'll definitely be an appetite. You know, there's strong appetite for this IPO, I'm sure, as long as they price themselves well and, you know, don't kind of get too greedy on that side, which usually I don't expect a Korean company to do. So hopefully it'll go well. But, you know, I was just listening to your discussion, the three of you talking about the size of the IPO market. If this IPO sails through comfortably, it will actually encourage and pave the way for a lot of other IPOs, big ticket IPOs to start forming up. You know, whether it's from some of the PSUs that are in the waiting or some of the new age companies that have taken a backseat after the last round of softness, or maybe it could be even retail. I mean, there's so much that's happening in the market. People are waiting and watching for the right opportunities, and I think this IPO will be looked at for more reasons than just its absolute money garnering.
You spoke about big ticket. This ticket at 25,000 crore would be big enough to look like a check, and at the end of a cricket match, they give it to the player of the match, how they do. 25,000 crores actually bigger than all the other IPOs. The last one that I have, the biggest is LIC, which is close to around 21,000 crores. And then you had the others, 18,000 crore FPO by Vodafone. And then you had the 18,000 crore IPO that came in for some other PSUs, etc. as well. 18,500 for 197, which is now Paytm, as we know that.
Sorry, I'm going to spring a out of textbook question at you, if you remember, Mangalam, from the top of your head, because the other mega IPO that everyone's been talking about is actually Swiggy, whenever that happens.
Yes.
But I guess Hyundai would still be bigger. I'm not sure Swiggy is asking for more than 3 billion from the market. Definitely
no, I don't
not.
think so.
No, yeah.
25,000 crores is
a huge amount of money.
A lot of times the market caps of companies, this is what they're looking to raise.
Okay, fair enough. Well, that's on the auto sector, and auto stocks doing actually quite well today. The other space, Prakash, if we can get your thoughts in on this, is obviously the big cement deal that Nigel's been telling us more about. Ambuja, call on the stock. Would it be a buy for you?
Oh, yes. I think Ambuja is doing the right things, and they had announced that they would want to grow much more rapidly and hence look at the inorganic route. And they've put their money where their mouth is. What's interesting is that it's a decent sized acquisition from the unlisted space that's available for them to kind of grow very fast in markets that make a big difference. So, I think if they continue with this strategy and they are able to capitalize themselves well going ahead, they'll become very formidable. And at some point, you can imagine if they start fetching the premium valuation that an Ultratech has always enjoyed, things could be very different. So I believe Ambuja has always been a great play, but then, the best way to play that is you buy it on dips. For example, the day of the, election outcome, you saw a sell-off in all these names. There could have been a chance maybe sometime around March end where you saw some softness. So you'll have to time yourself a bit in terms of the acquisition, but I think the trajectory is very clear. The kind of metrics that they will start clocking are really interesting. So, it gives them a lot of positives by just kind of buying one business, which takes them to a new level in terms of the capacities as well.
All right. I don't want to ask you, Prakash, about Ambuja Cement. Some believe that Ambuja is entering the south, where one of your favorites is present, Dalmia Bharat. Yeah. I think the last time we spoke, you were not as positive, but that's been a big winner for you. You were positive on Dalmia Bharat at much lower levels. Do you think it will be a challenger to Dalmia, to Ramco Cement, or do you think the street is reading too much into it and these guys will prosper? The smaller guys are going to get smashed or smacked?
So there are lots of questions in one sentence of yours. The smaller guys will look at getting acquired definitely for some strategic reasons. There's so many of them which actually cannot grow beyond where they are. I mean, they've been incrementally increasing capacities, but they're still mid-single digits like Deccan and all. I don't think it makes a big difference even if you double your capacity when you're so small. The market's going to get hyper competitive once all capacities come on stream. The south is actually where the maximum growth is. You look at, just recently Brigade spoke about, putting in so much money in the Chennai market, which we all thought was a very slow, sleepy kind of a zone. And certainly, there's so much money pouring into it. So Bangalore, Hyderabad, these are hotbeds as far as real estate is concerned. But you look at the kind of growth that's happening. And I will throw Odisha into this, where infrastructure growth is likely to take a very different scale, Nigel. I think some of the capacities which they've acquired, which Ambuja has acquired, will definitely help them cater to a lot of these things. The other thing it does, the challenges, for instance, when you mentioned about Dalmia and all, they will feel the heat. But Dalmia, fortunately, has reached a scale where it can do well on itself, by itself. But the smaller ones, as I said, are the ones you expect a lot of M&A going forward, and most of them would be either in the south or some of them would be in the east. But mostly, I think in the smaller names will start featuring as probable candidates for M&A by some of these larger names.
All right, and as we speak, we're getting some flashes from the Ambuja con call, which is currently underway. Our team's listening into it, and all important flashes at the bottom of your screen as well. But Prakash, hang there, because what do you do with cement? You build bridges, you build roads, and you build buildings, Prestige Estates. That's the stock on our radar. There's a positive note that is coming from CLSA as well, taking the stock higher by about 3% after having seen a big move already. Sonal joins in with the contents of that report. Sonal.
Well, the stock has come off from the highs of the day. The stock is up just 3% right now. But yes, CLSA is quite bullish on that. And remember, the stock has already surged 262% in last 1 year. They say that it has been among the top 2 developers in terms of pre-sales over the last 3 years. However, the stock still trades at a significant discount to its peers. And this is despite the outperformance that we've seen year to date. There are certain concerns that the investors have. The first is a lower project pipeline compared to its peers, because that questions the execution. And the second is increase in leverage, because they are putting in a lot of money for land buys as well. CLSA say that Prestige is scaling up significantly and targeting rental growth of around 5 times in the next 4 years itself. They're looking at pre-sales growth of around 25 to 30% every year over the next 4 years. And they believe the operating cash flows will also sustainably improve. And this is something which will lead to lower leverage, or at least comfortable levels for leverage as well. They expect the interest coverage ratio to be more than 4 times, and they think this would be a comfortable level on their balance sheet as well. They therefore believe that such concerns are unwarranted and expect the re-rating to continue. They've also increased the target price. They expect it to be above the 2,000 mark at 2,320 rupees a share. They retain a buy despite that stellar rally that we've seen in last 12 months.
Okay, all right, got it. Thank you very much, Sonal, for the details there on Prestige. Prakash, going back to you actually this week, 2 companies, Sobha and Prestige, both have been in the news. One is looking at some fundraising. On Prestige, of course, you heard Sonal there with some of the positive brokerage commentary that surrounds the stock and the company. Your thoughts? Real estate, would either of these two make the cut for you?
No, I think, Suri, both of them are excellent businesses run so efficiently by management that's so mature and experienced. But look at the balance sheet. Now, what's happening is that the debt level, once it starts going up for some of these real estate players, and Prestige particularly is pointing, case in point, this thing is not going to work very well if you're only debt driven, in terms of growth. So a lot of them are getting to flex in terms of expansion in new geographies, new projects. For example, Prestige decided to do much more of rental yield assets, and that takes a lot of money to be put in upfront. So when that starts happening, you make that you get that feeling that these are very vulnerable positions that you're building up. Sobha, of course, has a slightly different trajectory and mix. But same thing as I mentioned, Brigade was talking about putting in so much money in the Chennai market. I would look at some smaller companies which are not stretching the balance sheet, and probably these are fairly small as compared to these names. So let's say there's a Shriram Property. I mean, it's not a very big company to talk about, but Shriram Property has its ability to take smaller projects, turn them around, finish them off, and move on to the next. So, there you will probably find much more value creation from a stock investor perspective. They may not have scale, as I said, but they'll probably be able to do far better in terms of this. And we've seen that in NCR, the smaller ones have outperformed the larger ones, right? Whereas the larger ones do hog the limelight and they're always in the news, but it's the smaller ones that actually could probably make some money.
All right, Prakash, thank you so much for joining in, and wish you a happy weekend, a long one at that. Have a good one. We will see you next week as well.
Thanks.
Okay, with that, we'll take a short break, come back on the other side. We have Dinshaw Irani from Helios Mutual Fund joining in. The market continues its march forward. We have the Nifty at 23,465. Big move coming by on a lot of these names. Even the broader markets continue to do well. We have a big gain in Indian hotels now. Indian hotels has spiked closer to its 52-week high, just about 2% away from a record high on that stock. Even as all the others continue to do well. ICICI Pru Life, for instance, up another 3%. This week's gains for that stock up around 8% as well. But that's not the only insurance stock that we're talking about. One of the biggest gainers have been ICICI Lombard today, and LIC, that stock too is up almost 7% as we speak. A big surge actually. Pull up the intraday chart of LIC and buzzing with huge volume. So Yash joins in to tell us what's driving these stocks higher. Yash.
Well, Mangalam, let's start with ICICI Lombard first. The monthly numbers for the month of May came out and the industry is grown at 15%. Compare that to how ICICI Lombard has grown. The company has grown its premium in the month of May at 22%, outperforming the industry by quite a margin. And it's not just May. In the previous month, that was the month of April, the company again grew its premium at 22%. So it's off to a good start as far as the first quarter of current financial year is concerned. April, May put together, ICICI Lombard has also gained market share by 60 basis points, and it's these positive factors which is aiding the stock performance in today's trade. Let's come to LIC. Very quickly, 5 important developments which has happened very recently, which are spelling out positive news for LIC. The first one, clarity on surrender value regulations. That came just yesterday. It seems LIC is going to be the least impacted player because of that high surrender value, and will have to continue business as normal without getting much impacted because of that payment of higher surrender value. The second one is the company's plans to enter health insurance market. As the new government has come in and started working on its first 100-day priority, LIC is going to be in focus because it is expected that an approval could come in for composite insurance license through which LIC could enter the health insurance market. One can imagine if a large player like LIC enters the health insurance market, it's going to be very, very positive for the company. The chairman in the previous interview had told CNBC-TV18 that health insurance is the natural choice for them, and they are exploring acquisition opportunities when it comes to standalone health insurance companies to make that brownfield entry into the space. Third reason, strong FY25 commentary. The management had guided for a 15% APE growth, 300 basis points upwards of APE growth in terms of VNB growth, and margin of 19 to 20%. Well, it remains to be seen how they grow their VNB and margin, but as far as the first 2 months APE growth is concerned, they've already grown at 15%. Valuation comfort is also there. The cheapest insurance stock at about 0.9 times price to embedded value, with the strongest guidance going ahead. And finally, supply overhang. SEBI has given them the approval till May 2027 to achieve 10% public shareholding. So there is no supply overhang also which the market is anticipating.
Brilliant. Thanks a lot, Yash, for joining and giving us those top reasons why LIC is buzzing in today's trading session. Dinshaw Rani of Helios Mutual Fund joins us on the show. Hi Dinshaw, good afternoon and good to see you win. Well, since we're just talking about insurance, wanted your view. How are you all placed to this theme, the insurance theme? LIC out of nowhere is up 7%, been a rank underperformer, but today coming back to life. In fact, the sector on the whole hasn't created too much returns if you compare it with what the other stocks have done.
So, Nigel, first of all, thank you for having me on your show, and a very good afternoon to you, your team, and the viewers. So here's the thing, Nigel. My feeling is that there were a couple of positive points which came about. I mean, the clarity on the surrender values which came about yesterday, saw the stocks reacting negatively, and then today finally they're looking up. But however, having said that, I think it's a sector which hasn't performed at all. And maybe the new money which is coming in is trying to get smarter and try to pick up stocks which are in the which haven't done well in this rally as such. So our feel is that this is not actually we're not too bullish on insurance at all as of now, but we are very bullish on the financial sector though. So I'll leave it here.
Financial sector, I mean, what's known is your affinity towards the private sector, large financials, Dinshaw. So just wanted to know whether you continue to back that theme. While you back that theme, also dabble around, these others which are moving?
So actually, Mangalam, the fact is that we are fairly bullish on the financial sector overall. Forget about the private sector banks. We have a few public sector banks too. And obviously on the services front, we got quite a bit of exposure on NBFCs, on housing mortgage companies, and so on and so forth. So we're quite, in fact, we are so bullish that we brought out a new fund. And in fact, today is the closing. It's a financial services fund purely on that basis. I mean, if you're looking at the economy growing, this is the backbone of all economies which are going to grow. I mean, and the fact is that India's probably going to go at a very sharper pace than what it done earlier. So it's obvious that this sector will do well. The perception is that the sector hasn't done too well in the past 3-4 years, basically during the COVID period as such, post the COVID period, sorry. The fact is there's only one major overhang there, and that's a third of the index, the weight of the index. So I think that particular stock has turned around. That's one of our favorites. I won't even hide the name. It's HDFC Bank, and I think that stock looks pretty well poised for a run-up from here as such.
Got that. Dinshaw, so tell us more about financial services. HDFC Bank, we know it's been one of your old favorites. But really, how else are you approaching this space? It's a wide, diverse setup. In between, we've had a great run on a lot of these stock market-related businesses, right? Whether it is wealth management companies or whether it's exchanges. So is that an area of preference? Within insurance, you said you'll be selective. So, what else would you look at? What about, other businesses? What kind of NBFCs? This is a wide universe. So give us some more color on your preferences.
So, Subi, good you asked that question, because that sector banks are just a part of it, right? Private and public put together. There are some 12 or 13 other subparts to this sector. And as you rightly mentioned, the ones which we call the gatekeepers to the equity markets, which is your brokers, wealth managers, the exchanges itself, and obviously the rating agencies and so on and so forth, and the depositories. There are lots of these smaller players who are working around, or the distributors, if you will. So these are the ones which are really the exciting part. Unfortunately, the index is very skewed towards banks. In fact, public and private put together is around 80% of the index. So I think if you go away from that, and if you look at purely the services, it's going to be a fairly exciting market going forward for both the banks and services put together. But let's see how that goes. Keeping up.
Okay, yeah, the good luck charm, Dinshaw, this afternoon. As you speak, the markets have moved to the high point of the day. So we'd like to attribute it to you, and you can take credit for it as well. But for the time being, good to see. I don't know whether 23,500 is here. Just a number, but you like to go into the weekend at fresh all-time highs. And that's precisely what we're seeing.
He spoke about his old favorite that he's been backing, and he, made no bones about his love for HDFC Bank. So the intraday chart of HDFC Bank comes up for you. That's the one that actually led the Nifty higher. It's been doing, it's been underperforming, but its sheer weight on the index has led, not only the Nifty higher, the Nifty Bank higher as well. And it's a fresh record high that we're looking at. So we can give him credit, all the credit here this time around.
Absolutely, because this was the one part of the market that was not performing. I mean, I was saying this even yesterday, today, that banks are not firing, not firing. Well, they've started contributing. Then you have a giant like Reliance. So, between, I think, these two heavyweights, they're more than making up for the sluggishness that we've got on the IT side of the screen. But yes, we've got those fresh all-time highs coming in.
Well, that's right. Dinshaw, you were briefly speaking about these capital market plays. I think MCX and Motilal, both those two were some of the plays that you had in your portfolio. You want to update us if that's still intact?
Oh, yeah. So sure it is, Nigel. In fact, just before this, you mentioned about the all-time highs. You know what? I've told all the channels that I'm not going to come and comment on all-time highs, because every day is going to be one. Maybe a couple of days lag later, there'll be one. So, but that's what the way our markets are going to be. A peak is just a small step in the overall game of things going into the future. So, yeah, we continue to hold both these stocks, and we're fairly bullish on both of them.
Outside of financials, what are you looking at right now? Because y'all were backing Zomato for the longest time. Consumption, people are believing that maybe, there would be some recovery in rural consumption, etc. Or rural infra. How are you all playing this non-financial side of things?
So the rural part, the rural recovery, I don't think our portfolio is going to be much impacted whether there's a recovery or no, because we were looking at, as we had highlighted, a slightly more higher category of consumption. We were looking at tourism, the likes of Zomato, which again is, so these are the players that we are playing consumption with rather than pure FMCG. I think rural recovery will more or less have some impact on FMCG, but I think they're already priced into that particular sector. So we are more into discretionary, and that was a higher end discretionary. And the call again is that the real wealthy households are going to grow in leaps and bounds as our economy grows.
So is it through Titan or is it through Kalyan Jewellers? Or what would some of the names be there?
None of these. As I said, tourism is a big one here for us. So we quite overweight here on tourism itself. So.
Okay, fair enough. Dinshaw, I mean, how are you looking at the capital expenditure related plays? I know we've been discussing this for the past 1 year, and you've been, telling us about how it's not a really, hot preferred sector for you. But the fact is that the stocks are still running, despite the election day volatility and all that followed in the last, couple of days. Look at how quickly they've danced back. I mean, whether it's defense names, whether it is even the private sector, capital goods major. So what's the thought? Not on the financial services front, but other portfolios. I mean, how are you dealing with this?
I got that. So Surbhi, actually, we were quite, so in fact, today morning only I was looking at one of the manufacturing mutual funds. They had pharma in their portfolio. They had FMCG in their portfolio and paint stocks. And I don't know. So in that way, we already invested in manufacturing. We got defense, we got capital goods, we got these EPC plays and stuff like that. So I think looking at that portfolio, I think we are very much there in manufacturing. And we've got good stocks there. So let me assure you about that.
No, but I'm not talking about manufacturing from the point of view of, okay, if you're making a candy, that's also manufacturing, or if you're making biscuits, that's also manufacturing. I'm not talking about that, but I'm saying more in the pure sense of the term. You know what I'm asking? Your ABB, Siemens, and defense and railways and so on and so forth.
So ABB, Siemens, I mean, good you mentioned that we did look at those stocks, but we couldn't justify the valuations, and especially for guys who are into capital goods. So we leave it there, right? The MNC probably valuations are kicked in there, but frankly, I mean, there are a few corporate governance issues also around, especially for Siemens. But anyway, let me leave that there. The fact is that we're fairly heavy into defense. We are totally overweight in defense. We got two big players, one private sector player. And obviously in manufacturing, we got the biggest guy around, not biggest guy, but he's into the EPC part of the business. So it's fairly good, well placed with us. So I don't think we are underweight manufacturing. In fact, if anything, we are highly overweight manufacturing in that sense of the word. Okay. Like oil and gas also classifies as manufacturing. So we fairly, overweight, as in massively overweight there. So these are the ways we are playing it. We are trying to be a bit more saner in our approach to valuations than just trying to pick up whatever has a manufacturing word in it.
Okay, all right. Dinshaw, I wanted your comment on telecom. For the time being, we have some news that's flashing for you on the screen that Vodafone's looking to sell its entire 2.3 billion stake in Indus Towers. So that will be a bit of an overhang. And I think the article mentions that it's likely to be on the cards sooner rather than later. I think they're talking about next week itself. So that will be a bit of an overhang on Indus Towers. I think that's why that stock has come off a little bit from the high point of the day. We'll have to wait to see more on that. But Dinshaw, your comment on the telecom space, out of nowhere, you have Vodafone that came back to life. And, now, in fact, the street is hoping that in the near term, they'll survive. And maybe they've revived, they are going to survive. And maybe at some point of time, they'll thrive. But for the time being, I think the street likes the fact that they're going to survive. How do you all have exposure to the telecom space?
Yes, we have. We have Bharti, in fact, on our portfolio, which you can see in the May end portfolio as such. And we got to play it with a very stable player who's into cash surpluses now. In fact, if you remember telecom not so long back, the whole industry used to have a heavy capex. And as a result, there were negative cash flows and so on and so forth. The cash flows are now positive. In fact, Bharti came about saying that from here on, you're seeing peak capex is happening. And from here on, you'll see a downturn in our capex because 5G is already into our price. So it's obvious that we'll go with the most stable of players. I don't think we'll be too excited with what's happening in Voda because there are a lot of ifs and buts floating around there. This has to happen and that has to happen. This will happen. So this is not how we play it. We are with the clarity that there should be multi-year tailwinds and that should be easily visible to you. So.
All right, a big move is what we're seeing on Vodafone Idea on the back of that V, as we call it now. But Indus Towers, as understandably, off the highs on account of that supply likely supply that's coming in. These are news lines that have come in to Reuters via sources. All right, Dilshaw, thank you so much for joining in, and as we say, congratulations for a record high on the Nifty being there, as you were talking about it, and we will speak to you soon as well.
Pleasure.
Short break. There's some profit taking actually from record highs. Now the Nifty is up around 60 points, so 30 points off highs, nothing really to worry about. Take a short break, come back. We will get you a check on what dealing rooms are saying in our special D Street chatter. Also tell you what to buy today or sell today for a reverse trade 3 days later.
Welcome back. Well, as Mangala mentioned, we came off a little bit, but I think that dip as well is getting bought into. So let's see how this goes. Adani Enterprises, that's the one that's spiking up as we speak. And the Royal Enfield Eicher Motors in a world of its own, up 3%. Good time to get in Nimesh. He's here to tell us what he's picking up in D Street Chatter. Nimesh, take it away.
Hi, Nigel. So this week really belonged to the broader markets, right? The mid-cap index is up 4%, small-cap index is up 5%, and a lot of individual names have rallied pretty hard, like across the board. So that's been the theme for this market, and this outperformance in broader markets is backed by institutional buying as well, both from FIs as well as from DIs. That's the overall sense. But today the flows are positive, but again it's going to be very, very stock specific, is what I understand as far as flows are concerned. The big sector of the day seems to be the defense names, big move in that stocks, and then large volumes as well. I guess one part of the excitement is because of the NFL launch by a domestic mutual fund. But remember, it's a passive fund, so not immediately they are going to put money into the defense stocks. But nevertheless, all the defense stocks are buzzing in trade today. And the other big theme has been the trend of large block deals. As we speak, we just flashed the Reuters report about a large block deal in Indus Tower next week. So I'd covered it in my deal sheet charter. But apart from Indus Tower, there are multiple other blocks as well which are in the pipeline. So that trend is likely to continue. And from a momentum point of view, it looks like the broader market outperformance is here to stay.
All right, broader market outperformance is here to stay, and some of those broader market names doing extremely well, Nimesh, as we speak. Trent has moved to the high point of trade, yet another record high. What a run this stock has had. Almost 200% in the last 12 months or so. It's tripled. On the company held an annual general meeting, and they said that they are looking to open 200 more Zudio stores. The next leg of growth for them would be, something like the Star grocery business that they will start around 25 to 35 stores as well. So a big move is what we're seeing out there. But Nimesh, we can't let you go without all the individual stock tidbits that you're going to give us.
Well, sir, I'll start with the two companies where there were large blocks in today's trade, and both are buzzing in trade. First is Restaurant Brands Asia. There was a large block, nearly 75 lakh shares. And the other one was ICICI Lombard, and both are up after the large block. So the disclosures could be quite interesting in both those names. The second stock is Adani Transmission. Just look at the Y2D chart or a 1 year chart. It's absolutely flat. The stock has done nothing in that Adani group and from the overall markets as well. Remember, the board has already approved a fundraising plan of up to 12,500 crores. I understand the QIP is going to come very soon, hopefully next week. And the feedback is some very large marquee investors are going to invest in the QIP in Adani Transmission, which is Adani Energy Solutions now. The third name is Bharti Airtel. We spoke about a large block expected in Indus Tower, but there is a very strong buzz that maybe you'll see a large block in Bharti Airtel as well very soon. Remember, in the last few block deals, Singtel has been a seller in Bharti Airtel. So again, the speculation is that maybe that there could be a large block in that particular name. And the last is a couple of names where there are good buy flows. So HDFC Life, again, big buying in HDFC Life in today's market, and also HPCL. So both the stocks are buzzing, but I understand there are very strong buy flows. So expect very high delivery volumes in both those names today.
Okay, all right, got it. Thank you very much, Nimesh, for that. So lots of action as always, and of course, plenty of moves in the broader market as well. With that, let's quickly go across to Mitesh for some final trades before we wrap out the day and the week. Mitesh, what do you have for us?
So I would recommend, a BTST and Canfin Home and Cipla. Cipla, I would recommend a BTST with a stop at about 1554 for targets of 1585. Canfin Home or BTST with a stop at about 829 for targets of around 845.
All right. Do you have a word on Trent, Mitesh?
See, I think I had a buy on Titan earlier. I haven't checked trend, but again, yeah, it's closing very strong. I would want to see the 5300 strike being taken out. I think there's some call open interest over there, but the stock, I think, again, Mangalam, like many other stocks, remains in a firm uptrend.
All right. There is some live footage from Italy coming in. It is Prime Minister Modi. With him is the French President, the French Premier Emmanuel Macron. Both of them having a conversation on the sidelines of the visit that Prime Minister Modi has had to Italy, his first official visit after taking oath as Prime Minister for the third time for India. We'll try and get more updates from there as well. But the big acquisition that took place last evening was the cement in the cement space, the second big ticket acquisition since entering the cement business by the Adani Group. They've bought Penna Cement for an enterprise value of a little over 10,400 crores. Nigel's moved across to the wall to give us more details. Nigel.
That's right. Adani Group has acquired Penna Cement at an enterprise value of around 10,400 crores, which will be funded via internal accruals. For Ambuja Cements, well, it adds close to around 14 million tons of capacity. It takes the total capacity to around 93 million tons, including the operational as well as the to-be operational capacity. And what it does is, it puts them on course to hit the 140 million ton target by 2028. It also improves Adani Cement's market share. Pan-India by close to around 2% and in South India by close to around 8%. Now, Penna Cement's capacity is located in Andhra Pradesh, Telangana, as well as in Rajasthan. The total capacity is around 14 million tons, but 4 million tons is currently being completed. Additionally, 90% of Penna Cement's capacity comes with railway sidings, and it will also be supported by captive power plants and waste heat recovery systems. Now, moving to the valuations, it's done at roughly around $90 per ton for around 14 million tons capacity. But the management says that they have surplus clinker at the Jodhpur plant, and this will help them go ahead and increase their capacity by an additional 3 million tons of grinding unit capacity. For this 3 million tons, well, they'll have to incur roughly around 800 to around 1,000 crores odd. So plugging in the numbers then, 14 plus 3 million tons, you'll get a total capacity of around 17 million tons, and the enterprise value per ton comes to around $80 per ton. So to sum things up, well, it's a good deal for Ambuja Cements. They're getting to use the cash in its books. It'll help them improve their return ratios, and also they'll be moving towards that targeted 140 million tons. Additionally, they've laid out some ambitious plans for this acquired asset, that's Penna. They're looking at taking the utilization levels up to around 85%, the EBITDA per ton improving to around that 1,500 rupees odd, and the ROC as well improving to around 15%. We're seeing some bit of a rub-off as well on other companies, namely Sagar Cement, NCL Industries, KCP, because all these companies, they have exposure to the region as well, and they trade at valuations that are a little lower than what the deal was struck at. Finally, could this result in additional competition in South India? Well, if that's the case, then Ramco as well as Dalmia Cement's dominance could be under threat in South India. For the time being, a good deal for Ambuja Cements, some kind of positive rub-off on some of those smaller players, and will be interesting to see whether as they ramp up the capacity utilization levels of Penna Cement, will it put pressure on pricing and in turn profitability in South India? Time will tell.
All right, Nigel, thanks a lot for that. Time will tell, but for now, the time is telling big moves in a lot of these names. Signature Global this morning had said that, there was news that they are looking to increase some of their expansion in the northern part of the country. We're also seeing some traction come by in Varun Beverages, one of the bigger bets of CLSA. They had the F&B report that came in yesterday. So Varun Beverages has moved well, up around 5%. And as we speak about IT-related names, Quick Heal, the name that we don't really speak about very often, has now, moved 9% right now and actually has moved 31% this week itself. So that's another stock which has seen some volumes pile up. But good time to get into a short break. And as we do that, let's also listen into a CNBC-TV18 exclusive. Earlier today, we spoke with Manish Chokhani of Enam Holdings, who remains upbeat on India's growth story.
Markets already voted that they think it now is continuity, and while the outcome wasn't what the market expected, I think the market had baked in that there will be at least a simple majority of the ruling party and the NDA will come back with 300 plus. So this lower number of seats certainly spooked everyone. A lot of good things have happened, and one is expecting continuation of that to make, as I say, velocity of doing business in India faster and easier. What's happened is small cap, mid cap have actually experienced a bubble because some of the prices are just fantastic. I think some of those prices people will not see 10 years later. The companies will perform, don't get me wrong. I'm bullish on our economy. I think we get to number 3 and eventually in this century we will be number 1. We will be the largest economy in the world.
5 minutes to go before the week wraps up, and we have Siddharth Khemka joining in to take us through the last round, the last leg. Siddharth, hi, good to have you on the show. You know, we've just been discussing this and watching in awe. These defense stocks, they are absolutely gravity defying. It seems they have something special going on, right? I mean, look at Mazgaon today, 15% higher. Even the others, you know, the likes of a Garden Reach, etc., they're all up in double digits. What do you make of this? What do you think is causing this fresh round of excitement?
Yeah, I think the entire investor community is surprised.
Siddharth, I think you're on mute.
Hello? You can hear me now? Hello?
Yes, we can.
So I was saying that the entire street is looking at this surprise move with awe because we had a very strong rally in some of these names for last couple of quarters, and post the election we saw a sharp correction. Definitely valuations are something which we cannot discuss. They are astronomical levels, but just on back of the very high expectation of growth, what the new government and the new ministry has come and said that not only the Make in India opportunity, we will now look at defense as a large exports opportunity, and we could expect some policy in the likes of PLI schemes for some of these defense names. So we have already built capabilities. We are building some of these defense equipments in technological tie-up with some of the global players, and now looking for exports. So I think it's a decadal story which will continue to play on for a long time. Yes, again, in the near term, I don't know how the stocks are going to continue to react. It's a rush of liquidity towards these names, I would guess.
You guys have been rather bullish on Trent as well. So I just wanted your thoughts on that. Despite the sort of valuations that it commands over all the others in in this sector, what keeps you all bullish, still bullish on Trent at these levels?
Yeah, Mangalam. So I think that is one company in the retail space which has been consistently delivering quarter after quarter and right to the T in terms of their growth plan. So we recently attended the AGM. We came out more bullish. We upgraded the target price to 5,500 from our earlier roughly about 5,000. I think that revised target would be met in a couple of days itself. The company continues to post strong growth. In FY24, the revenue growth was 55%. And it was aided by a 37% store addition, 10% like-to-like sales growth, or same-store sales growth. Expansion momentum, that is something that is likely to continue. And a key change is ready to launch the Star Bazaar, which is your grocery. And that is something that we have seen across the street, people being very optimistic about, even with the likes of Zomato, where Blinkit is kind of taking over and becoming a larger profitability or contributor to the overall business. I think there is one company which has consistently delivered and has outpaced the industry growth, industry leading same-store sales growth of 10% and hence gained market share. Valuations, I think the premium valuation that it commands is justified given some of its businesses which does very well, be it Zara, be it your Zudio, be it now the Star Bazaar. So overall, I think adding up everything, still valuations premium, but the stock looks good, and hence we continue to remain positive.
Got it. Actually, we had some more footage, more visuals over there at the G7 meeting. Prime Minister Modi on the sidelines of that meeting, catching up with Rishi Sunak.
I wonder what the conversation there would be. Rishi Sunak definitely wanting to know from Modi how to win the next election.
How to win
because
elections.
July 4th is when the UK goes into elections as well.
Something with the 4th maybe as a date, at least as far as this calendar year goes. Okay, there's a warm hug there between Rishi Sunak and Prime Minister Modi. So that's the latest coming through from the G7 meeting. Good place, good time, right? Italy in the blooming summer in Europe. It should be a very interesting event to track, and of course we'll keep getting you all the headlines from there. But speaking of headlines, we have to come back to the market as well, because the headline is that this market has had a good week. We're not closing at the absolute high, the intraday high that we saw, but nonetheless 23,450 getting closer and closer to the 23,500 marks. That's a 0.25% increase. Of course, the big winners are in the mid-cap and the small-cap arena, which I will leave for Mangalam. But very quickly, to round up the large-cap space, today it was the auto sector absolutely revved up. Eicher Motors, Mahindra & Mahindra, look at something like a Tata Motors as well. These were the three top performers. Beyond auto, some of the Adani stocks, Adani Ports, for instance, have had a good run. Adani Enterprises as well, actually 1.5% on the higher side. Then there have been the biggies, HDFC Bank, about 8% higher.